I don't think it's a secret that it's never been more difficult to grow and scale an Amazon business. And frankly, the environment to sell and exit an Amazon business has gotten a lot harder than it would have been, say, a year ago. But this video today breaks down one of the more exciting things I've seen develop in the space that helps solve both of these issues. So let's get after it. Hey guys, welcome to Heist. Let's get right after it. If you don't know the story, I've built multiple Amazon businesses and I actually sold one of my Amazon businesses back in June of 2020. Since then, I've become very immersed in the Amazon aggregator space. I'm super curious and frankly obsessed with how everything shakes out to build, scale, and sell Amazon businesses. But a lot has changed. The macro environment of the economy has gotten a little bit softer. It's harder to raise debt. And a lot of the Amazon aggregators have struggled to get their footing and understand how to deploy all that big money that they raised. So the market softened. At the same time, the Amazon FBA platform has also seen some changes here over the last year or two. It's become professional, margins are getting compressed, it's become more complex to scale and grow a business. So a lot of brand owners find themselves in this no man's land, so to speak, where they built a thriving, successful Amazon business, but they don't know how to scale it into mid 7 figures, 8 figures, mid 8 figures, and beyond. And at the same time, opportunities to sell for a high multiple have also gotten a lot more opaque. So one of my really good friends in the space and just good friends in general, Yoni, who has been one of the leaders at Multiply Me and Scala, brought together basically a dream team of folks in the space of scaling, growing, and exiting Amazon businesses and formed a really exciting new venture called SouthCol. I'm going to hold off on revealing what that actually means. It's going to be in the interview here later on. But effectively what they do is they take those successful brand owners and those successful brands that have scaled to that low to mid 7-figure range and that don't know what to do next. They inject a team, they bring in sophisticated private equity based folks that know how to actually build the story and exit a brand for a high multiple. They have the growth strategies, and probably most importantly of all, they've got the capital to infuse to actually grow those businesses. So the concept is to take these businesses that have reached success, spend 18 months on a growth playbook with the money, resources, and sophistication to get them there, and to grow them to a size and scale in the low to upper mid 8 figures so there can be a really life-changing exit event. I believe in Yoni so much. I believe in the team around SouthCol so much. I'm also going to help advise them. I think it's just one of those things that I wish that I had. If I had the time and mental energy to build it, this is exactly what I would build. It's an incubator for up and coming Ecom and Amazon FBA brands. It has the possibility of dramatically improving and scaling businesses beyond what they thought was possible. So let's cut to this interview where I discuss SouthCol in detail, what it means, what it's all about, and how it may help you. If you're interested and you think you meet the right dynamics of these businesses, there's a link down below with more information on SouthCol. And if you're just growing and trying to get your business to that level and aren't quite at that size and scale yet, good news is that Yoni and I are going to team up here through the rest of the year, and they're going to break down everything that they know about building and scaling Amazon and Ecom brands. We're going to have a lot of deep dive content that's going to help a lot of sellers. Hope you guys enjoy the chat. All right, so I'm super excited to bring on board a couple of the members that is the band that is SouthCol. Again, super excited about this project and initiative. So Yoni and Nick, I'll maybe turn it over to you guys for a quick intro of yourselves, as well as a couple of the key folks that aren't on the call, and then we'll dive into SouthCol and what you guys are all about.
Love it. All right. Well, I'll jump in here, Nick, and I'll let you follow up. So Yoni Kozminski. I'm co-founder with Lippy, or Ellie Lipschutz, as he's formerly known. Not many people know his name. We've built a couple of businesses and actually helped grow and exit an e-commerce business before starting Multiply Me, which is our executive search and HR function into the Philippines. And then quickly after, brought Scala to the world, which is a process improvement consultancy focused on, I would say, sizable e-commerce businesses anywhere from sort of that $5 to $200 million range, where we come in, we systemize and document and build them for scale, or in many cases for sale. So 35 full-time management consultants, mostly coming from Ernst & Young, Accenture, Deloitte, name one of the big management consultancies, and we likely have brought someone in from there. And our goal has always been to help democratize management consulting and make it accessible to a lot of the players in the space. But ultimately, it's led us to SouthCol, which we'll talk about in a little bit. But before we get into that, I'm going to pass over to Nick and let him share a little bit about himself and the other members of the band, as you so well timely placed there, Adam.
Yeah, clearly in this band, I'm Ringo, so I got that. So my background is in e-commerce, and after Stanford Business School, bought a business, ran it, sold it, used the investors from there to start a fund, and invested in a very small company called Sellers Funding, which is now rebranded to Sellers Fi, and was on the board when they were nascent and just growing. This was 2017. Then in 2019, Ricardo Pero, the CEO, asked me to come on operationally, first heading up sales, then moving over to the CFO role as they did their Series A and raised a new debt warehouse and some really exciting things. In the process of doing that, met Yoni and Lippy, and then also our other two band members, Jason Somerville and Christian Furling at Global Wired Advisors. We started talking a lot about sort of a hole in the e-commerce funding and growth and sale part of the market, and how each of us had these different skill sets that could come together. And out of all of those conversations, we came together and said, look, this needs to be a company. And we formed SouthCol. That's what we are. And that's my background. And we're excited. We think it's an amazing time to be doing it too, just in terms of the greater macro environment.
Yeah, so I think one of the things that kind of drew me to this project, just as a bystander, honestly, Yoni and I were kind of talking about it, man, it's probably 4 or 5 months ago now at least. But it's heavy hitters, right? Like I think Yoni and Lippy are some of the most experienced and thoughtful folks I know on the operational scale side and just what they do in terms of going into businesses and helping them scale. I've got a lot of close friends in the space that have used the service. Work with lots of the major aggregators on staffing them up. So you've kind of got that operational plumbing piece. And then Nick and I got to break bread at a New York Jets game and got to know each other a little bit. And again, like heavy hitters in finance. I mean, we're talking about 9 figures plus money raised and deployed and just kind of that sophistication behind the scenes that a lot of individual business owners or small team business owners just don't have access or knowledge of. So I think the team as a core foundation is super exciting for me. And then there's this gap right now that I see, and I'll let you guys kind of share the story in your own way, but it's not necessarily the best time to exit a business. Even if you've kind of reached that threshold that's enticing enough to get some of those players to the scene, whether it's aggregators or private equity or individual family office buyers, it's just going to be a soft, 6 to 18 months. It's just the reality of it. And so the maximum opportunity to extract value for all the hard work you put in may not be the best time. That's kind of point number one. Point number two is, and this is the cool thing about business, the bigger you get, not only the bigger payout you get just because of the size your business is larger, but you get a bigger multiple as well. Mm-hmm. But that chasm is difficult, right? I mean, it's not the most difficult thing in the world to get to 1, 2, 3 million. It's not easy, but it's not the most difficult. But that's a big gap to get to that 10 million, and the skill sets, the money, the sophistication, a lot of what's in your background to get to that level and really have a major FU money kind of exit. Is I think what you guys have looked to cultivate here. So maybe just talk about SouthCol and what you guys built and where you see it going.
Yeah, I don't know. Do you want me to take that one, Nick? But before,
jump in and I'll jump in after.
So just one other thing as well, while we're going through sort of the heavy hitters, I think it's important to note that Global Wired have done well north of $1 billion in transaction value, and would be one of the premier, if not the most significant investment bank in the in the digital native e-commerce space. So just as a reference too, I feel like they're not here, and I kind of under invested on where they are. You get caught up in it, so it'll come up. But in terms of the question, so SouthCol, as Nick had mentioned, was a work in progress for a long time. There was a lot of discussions behind closed doors trying to figure out how do we bring this together. So let me start off with the first piece. SouthCol, the meaning behind the brand. And I think for any brand owner, it's really important that, like you guys and like everyone out there, we thought a lot about it. So SouthCol is the last base camp before you summit Everest. And the whole premise, and as Adam has highlighted and talks a lot about in his videos, is that it is a very different reality from going from 1 to 5 million and 5 to 10 or 15 plus. And what we noticed in market, and one of the big gaps, is that what you what got you here isn't necessarily going to get you there. And starting to bring in resources, capabilities, and a clear roadmap made a whole lot of sense. So that's what SouthCol is. SouthCol effectively enables founders to actually focus on the things that they love doing most, and that's things like new product development, expanding on the brand, doing the things that they started the business in the first place around and why they got into the game in the first place, where the Escala component and one of the three critical pieces to this puzzle is that operationally, we're looking at how do we remove the founder and find ways to free up their time so that they can maximize that multiple expansion and that SDE. So that means while a lot of us love doing things like PPC management or inventory management, there's much more valuable things that time can be spent on. So we come in and we effectively assess where can the founder be of most value and what does that look like, working very closely with Chris and Jason of Global Wired Advisors in understanding what does this actually mean? What does 24 months out need to look like? And how do we structure it from a day by day, month by month, week by week, and each year, what do we need to hit? Not just from a revenue number and what does the multiple look like? Obviously, those things are very important, but ultimately, like what are the actual strategic decisions we're going to make to get us there? What does global expansion look like? Does that make material sense? What does it look like from a channel expansion? If we create a degree of differentiation in our product when it comes to IP and patents, and we have a protective moat that's more than just a number of Amazon reviews that we have there and we have a bestseller badge, how do we really build this into a strategic asset where founders are taken well beyond what their traditional means are? And I can't forget, one of the most critical pieces here is that we've stood up a $50 million fund here. And what we're looking to do is actually invest capital into growing the business. So that money can actually be leveraged and used to work with the ultimate professionals, the best people in this space. And I'm not talking about us in the team, because that's not where the money's going. The money is going to everything outside of us, because we effectively come in and support the business. And we are going to do absolutely everything in our power to make sure that the business gets the fuel, guidance, and direction that it needs to hit its ultimate peak and summit Everest.
And just to piggyback on that, just to hit a little bit what a Scala and what the process that we have at SouthCol is, when we first sign up and you come to us, the first thing that we do with a client is we have a 90-day plan. And during that 90 to 100 days of our 90-day plan has 100 days in it, just so we have a little time, we build up exactly understanding your business, getting deep, going through all of your processes, everything that you do, everything that the company does. And then at the end of that, we then schedule and have a big meeting where we build out 6-month, 12-month, 18-month goals for that 24-month exit. Because remember, by that point, that's 24 months. And every one of those along 3 different dimensions, 3 different channels, we start thinking about what do you need to accomplish? When do you need to accomplish it? So that we can start setting, here are the milestones you need to accomplish 3 months from now, 6, 9, 12, 15. Because without a North Star, you really can get taken off track. But when you know what you're going for, even when you hit waves where things don't go perfectly, because having run a business, we all understand reality can be messy. So sometimes things are going to come up. But when you know that you need to adjust but get back to where you're going to go, that's how you don't get lost, where you know that at the end, you know what you're going to do. And then circling back, Global Wired, one of the great things about having them as a partner is they start whisper campaigns 6 to 12 months before we sell. They start talking to strategics. Hey, we might have this, this great company coming up. It's not going to be for about 6 or 12 months, but this is what they're doing. Then that company doesn't have their radar up to sort of be against it because it's not for sale. They're not being asked to buy anything. They're not being said, are you going to pay this multiple? They just start to get interested in what the company does. And then they hear that we hit all of the successes along the way that we outline. They know that this is a company that just hasn't been dressed up for some sort of 6-month sale where they put lipstick on a pig, put it out to market, slaughter it, and think that's it. We actually have built the internal workings that they see have been built out over time. And that's how you get the higher multiples, in my opinion.
Love it. So just to kind of, I'll give you my take on it and then you guys can fill in the gap. So as a brand owner, whether you've got a small team or you're going solo, you built it up to low 7 figures, mid 7 figures. and you're in this conundrum space. I've seen this. I know a lot of entrepreneurs face this. You just get sucked into the weeds and the plumbing of a business, and you can't get out because it's a resource issue. You don't have the people and or the money, and cash flow is a big thing with ecom businesses. And frankly, you just don't have the time or energy or wherewithal to figure it out on your own. And so if you guys have had a chat with a particular brand and you think there's a mutual fit, just let's talk about the mechanics of this. So what do you guys bring to the table in terms of resources, money, et cetera? What do you take? What does the entrepreneur bring to the table, keep and take? Just kind of curious how things shake out, assuming that you guys have a mutual fit and you're ready to rock and roll.
I'll start, and then Nick will fill in the blanks, and then you'll just take the best of both worlds here. The thing that we look to bring when we look at a SouthCol opportunity and how we like to integrate and operate with a founder is that the first thing is we are materially aligned with the founder. So unlike a traditional experience with, even a broker or an investment bank or someone that's looking to run a deal, while these are critical and you wouldn't sell your house without going to an agent, it's the same, I would suggest, with businesses. I would never sell mine without a broker or an investment banker. This process means that we're actually 100% aligned with the outcome of the founder. So we're invested in the company, and their upside is our upside. And this is not a situation where we are a service provider like I have in my other businesses. And obviously we want to create the best possible outcome, and we'll do everything we can to make good. If this doesn't go to plan, we are on the hook just like the founder. And so I think the first material difference about a business like SouthCol is that we're invested and we're committed to the founder and their upside success. And we're on this journey with them. And there is absolutely nothing that we won't do to make sure that it gets done, and that it gets done in the right way, and that they are ultimately having that FU money and the payday that, we all hope to create for them and for everyone involved.
Going on, continue with what Yoni just said. I mean, what we do when we come to a company is we say to that company, what's a fair valuation? Not what you get today, because today the market's out of place right now. So we come up with a fair valuation, and we're only getting rewarded when we sell your company for above that valuation. So our interests are 100% only met when we've grown the pie much beyond where we are now. And we really, to be honest, when we look at a client, we have to reasonably see a double or triple. And I know I always say this to entrepreneurs, every entrepreneur should believe that they can quadruple their business, because that's what entrepreneurs need to believe. But we as outside people are coming in and we're saying we share your belief. We've looked at the numbers. We've looked at it from our experience. We also believe that that's there. But what we also know is in getting from here to there, there's a lot of places to stub your toe, to trip, to really choke yourself and hurt yourself in ways that can be very damaging. And we only know it because we have bruises and scars from our own mistakes that we've made, that has things we've had to overcome. And what we try to do is bring those strategies to you to avoid it. So you don't need to. The client doesn't need to suffer the same sort of problems that a lot of growing enterprises have, because growth is great. We always want growth, but we want profitable growth. We want strategic growth, and we want the ability to get to that exit. Because when you go to sell, if you can sell to a strategic partner, you're going to get a higher multiple. And so in any market, wherever the market is, there's a range of multiples that a company can sell for. And you'll have a low and a high end. Strategics are always going to be the high end, because they understand that if they can get a plug and play portion that helps expand their business in an area they're weak, they can put it over such a large base that even if they pay a higher multiple, they're averaging it over a much larger base. So that is a lower cost for them. It's not as meaningful for them, because they can grow out of it very quickly, because they have larger pipes that they can push everything through that everybody like us, we don't have, whether that's access to all 2,000 targets, end caps with, people making sure that it's tended to and sold, those are things that really the larger players have, and they can take advantage of it. And so therefore they want to get something they know will work. And what we do is try to get a company to that size where they're selling to a strategic, and that strategic is going, I want to have you because you fill a hole in my offering and it's of value to me. And so I want it. And so that's what we try to help them both understand where to go to, how to get there, and to avoid any mines along the way that can hurt them.
All right, so let's just play out a little scenario here. Let's just pretend I'm a brand owner. We've engaged, there's mutual alignment. We both kind of agree what we want to do. So let's say that this business is doing 5 million a year. Top line, it's making $1 million. We kind of both agreed it's probably worth around 3.5 million today. We want to quadruple that in 24 months for an 8-figure exit. What's literally the paperwork going to look like? What am I giving up and getting as an entrepreneur? And what's SouthCol bringing to the table? And what does that 24 months look like?
All right, so we're talking about a company that has $1 million in SDE valued at 3.5 million. The way we structure a deal is we'll take somewhere between 20 and 30% of the equity, and we will inject $1 million. And so what we do is we take that $1 million in the first 90 days, we identify where to spend it to grow your business. In addition, we're going to have weekly meetings with the entrepreneur at a strategic level with one of the founders who sits on the board, as well as 2 meetings a week with our operations team at the operations level. If that's also the entrepreneur, that's great as well. But the operations team will focus on the tactical needs of what we need to do to grow SDE from $1 million to $3.5 million, so that all the goals that we've set in our 90-day plan, which is going to be the initial tactical plan, to our 18-month plan, which is the strategic plan, that everything along that line is being executed. And that's where our fundamental sort of understanding of how every little task builds up into the bigger one leads to the fact that when we go to exit and you have 3.5 million in SDE, you're getting $12 million valuation. So that $12 million valuation, you're getting 80% of that. That's that life-changing number that you have gotten because you've grown from being a company to a brand who's sold to a strategic.
Cool. So it makes a ton of sense. So basically it's this concept of, hey, do I exit now for $3.5 million in potentially a soft market? Or do I want to go hard for the next couple of years, but have the resources, the money, the team, the structure, those answers to problems that I don't know how to solve myself, lock arms with you guys, get that built out behind the scenes, and then have a much more meaningful, larger business exit down the road. That's what's cool. I mean, I'm an entrepreneur and I know that problem distinctly. And I think that that is one of the most eloquent solutions I've seen and why I'm excited to kind of lock arms with you guys. One other tidbit that I think is really interesting, because you guys do have one of the best Ecom investment banks involved in Global Wired. First of all, they start that sale process not at the 24-month period, but there's planting seeds in advance of that. And again, I think that Rolodex is invaluable. But maybe also talk a little bit about what it would typically cost to go to a market with a broker like Global Wired and what that would look like in this case.
For the entrepreneur and how they should be looking at an opportunity like SouthCol, from going from 0 to 5 is one thing, but 5 to 15 and 20 and beyond is a very different reality. And so in this structure, and what we look to unlock is that first 90-day structure and guidance. We're really building a roadmap. And what's really special about this is, unlike a typical brokerage or investment bank that might take anywhere from 5 to up to 10%, depending on the size of your actual business, they're working with you from day one, not in that last 90-day sprint, trying to get things really ready. What's also happening through this process is, unlike a traditional Scala project, we're actually injecting management consultants into your business for the duration of 2 years. And through this process, in building out what that strategy looks like, leveraging the 5 co-founders who help assist in building this and also sit on the board, what we're also doing is we've got that guidance and that material decision-making throughout the entire process. So sure, we'll document all the processes, we'll create these efficiencies, we'll build a much better business, and we'll guide you through this process. But what we're also doing here is we're redocumenting the processes when you are that much larger business and you're going to market, and we can open up that buyer pool. And lastly, of course, we're going to get you access to capital that you're never really going to see in a business of this size and in that sort of tranche. We're talking about $1 million plus. If the opportunity is there and it makes sense to inject $2, $3, $4, $5 million, and we see how that upside can come about, and you as the founder who owns majority equity ownership in the business, who is the fundamental decision maker, who is effectively driving the ship, we're simply here and we're like training wheels in how do you really get yourself to a strategic exit, holding your hand every step of the way and giving you invaluable resources that in reality, I look at this and I think, I wish 3-4 years ago, before any of these businesses existed, I wish I could have the resources and capabilities and and be guided through this process throughout. And so I think one of the really important things you should be asking yourselves as well is, well, if I'm going to give up this equity, what would it have cost me to actually run through it? So I mentioned before, you're looking at 5% on the low end, really. If we're looking at a $5 million business, you're probably looking closer to that 10% range in reality. And so that's one aspect that you would pay an investment bank that you get wrapped in this experience.
So just to be clear, Yoni, on this one, the 5 to 10% brokerage fee basically doesn't get paid in this. So as part of the equity that you take, you're injecting a whack load of capital, you're injecting the human resources, you're locking arms for multiple years to build out that growth plan. And then when you do decide to exit for that higher amount, ideally, that brokerage fee of 5 to 10% is basically washed out and included as part of your equity, right?
Exactly right. Exactly right.
All right, so let's talk about the ideal brand and brand owner sweet spot that you guys are looking for in this model. We've got a link down below for folks to apply, but just maybe describe what you guys are looking for an ideal brand.
I mean, for us, where we start is the entrepreneur. And we want she or he to be somebody who's passionate, who's honest, who's dedicated, who's hardworking, who says, look, I built a great business, but I understand that to get from here to the next level, having support and people around me to bring data and process and management expertise to bear is good. So that's sort of where we start, where we want entrepreneurs who are just amazing, just great people, because when we get involved, for us, it's a very deep relationship. And we're very, very serious about working with people who align with our way that we look at the world, which is we want people who are providing a meaningful brand to a set of people who enjoy interacting with that brand. And we understand that it's a business, so we want it to be profitable and we want it to be growing, but you can do all of those things when you still adhere to some basic fundamental principles that we don't vary from. When we get beyond that, which is a hard screen, to be honest, we then look for companies that have revenue somewhere in the order of 5 to 30 million. We've looked at some that are bigger. If you're very fast growing, we've looked at a couple that are smaller. But the reason for that is we like to put in $1 to $5 million. And you need to have a certain size to be able to take in that amount of money to make it worthwhile. So I would always say to people that are smaller, we love to talk to you. We always are willing to discuss ways you could grow, and we'll have a relationship with you. And when you get to that size, work with you. But that's sort of our target. We want people that are in anything from CPG, something with a brand, something where there's some audience they speak to, that they're providing something to that audience. They understand that audience. They are passionate about that audience, and growing and profitable. Those are sort of what we look at when we look for a brand, because that's the ones that we're able to help them go up. They've already climbed up that mountain. Again, SouthCol, they've already gone up a long part of the mountain. So these are people who are very experienced and really know what they're doing. And we appreciate that.
So I guess let's cap this thing with what's next. What do you guys see the next couple of years for SouthCol, and where does the journey take us from here?
Yeah, so for the next few years for SouthCol, let's start first and say this is our first real public announcement. This is the first time that we're really making a little bit of noise about it. Like any good business, we wanted to be ready to be able to take on the size and the volume and do this at a relative scale here. So for us, we're open, we're open for business. We're looking for opportunities. We understand that it's a tough time, but people who make good decisions in a bear market often bear the fruits of their labor. And so for us, we know that we are definitely an opportunity for founders who want to reach that ultimate peak and to summit that mountain. So for the years to come, in the short term, we're looking to invest, I would say at least a deal a month would be fantastic. We have the bandwidth to do 2 or 3 or 4, but ultimately the most important thing for us is that we're picking the right founders and that we're working with people who are truly there to partner. For us, it's less about how many deals did we get done and how many investments did we make, but how many good decisions did we make and how many of the right partners did we bring in who are really about this educational process, who are really about growing their brand, and who really want to get their hands dirty in learning what it takes to grow a more material business, one that is not that 0 to 5 million journey, but something that you can walk away and say, I have learned life skills, things that will serve me for the rest of my career, things that will set me up with that FU money. We can't forget that. That will really set me up, not just from what I'm going to do in business, but for how I'm going to live the rest of my life.
Just to maybe put a cap on this too, aside from just being really close with these two guys as human beings, and that's where you start with your founder assessment too, which I think is really important, because it's not only how you do business and what you're actually building, but it's who you're building it with. So I'm super excited about this project. I would have actually liked to have started this on my own, but it was just too complex, and these guys have done the work really behind the scenes. So I'll actually be joining as an advisor to SouthCol on a couple fronts. Number one, having a fingerprint in the brands that you bring on board. So I'm super, super excited about that. I'm a business geek. This stuff literally is my obsession, and I love building and growing brands with really cool people. So I'll be involved kind of helping assess growth plans and kind of that path to exit and what that looks like. And then just really locking arms with the team behind the scenes and how can we make this the best for the entrepreneur. So really, really excited about what you guys are building. This is chapter 1. I can't wait to see what the next couple chapters look like with you guys. Again, thanks for sharing your story, guys. If you are interested and you think you fit that profile or want to have a conversation with SouthCol, we've got a link down below. They're at the ready. Happy to chat with you. But boys, really excited to lock arms with you and can't wait to see where we take this thing.
Thank you so much.
Could not be more excited.
Yeah, this is amazing. We're beyond excited and the future is bright, and we appreciate having you, and we're excited that you're along with us. We're excited to have you aboard.
Awesome. And then one final thing, be sure to subscribe to the channel here because we're actually going to be bringing in the SouthCol team, and they're going to openly share the playbooks that are working as they scale and build these brands. So they're value first, which is how I like to roll as well. So expect to see some of the SouthCol faces again. We'll probably come on, I'd say like once a quarter, something like that, but really meaningful case study based tactical, strategic things that you can implement, whether you're working with SouthCol or not in your business. So be sure to keep an eye on the channel for that upcoming content. Really excited to flesh some of that stuff out. And again, guys, pumped. Let's see where this thing goes.
Awesome.
Awesome.